Hi guys, welcome back to another Thursday night. And as usual, I hope that most of us has already been accustomed to every Thursday night we meet. We learn a little bit on all the companies that are listed in Malaysia. If you have been quite familiar for the past few months, last month I think we touched a lot on REITs. We also touched about pharmaceutical stocks, and I think just before REIT episode actually got completed, someone approached us and asked us to talk about tech stocks. And tech stocks, honestly, personally, is not my strength, especially Malaysia tech stock, if you guys must know, because Malaysia tech stocks is more towards the semiconductor side. It's more towards the I would say end value at the end part of the value chain of a semiconductor. So of course, that doesn't mean that we don't study. I mean, it's an opportunity for us to actually look more in detail. And of course, if you guys are in the semiconductor industry, also feel free to share your thoughts and your opinions also. So yeah, Kelvin, good evening. I think Kelvin is one of our loyal supporter, has been following us almost every week. Even if he cannot catch it live, he will also definitely watch the replay.
We should start.
Okay. Let's go right to today's protagonist, which is Inari Amerton. Disclaimer: this is just a sharing. Do not take any buy or sell call decision after you listen to our sharing. If it's a good company, just do your due diligence and study deeper. So, of course, if we were to talk about the semiconductor industry or the tech industry just in Malaysia, a lot of them are in the hardware side. A lot of them are also in the semiconductor side. And one of the key segments in the semiconductor industry in Malaysia is OSAT. So you might be asking, what is OSAT? You see a lot in the newspaper, even some of the investment blogs or forums, they just straight away use OSAT, but no one really tells you what is OSAT. So OSAT in its long form is called the Outsourced Semiconductor Assembly and Test. From the words, roughly, you can guess that they are in the assembly. That means they package your transistors, chips into their final form, and then they test it out. And if it passes the test, then only they send it back to the chip companies or the hardware companies to use it to make your phones, make your television or your hardware electronic gadgets. So just before we go in deeper to what OSAT does, I think it's always good to actually start up from a big picture. What is semiconductor? What is how chips are made? So if you can see here in a very brief schematic diagram, the chips that we rely so heavily on our phones and whatsoever computers, they're made of silicon. And silicon is basically sand. So how do you make silicon? Basically, you get sand, or you derive silicon from sand. You purify it or whatsoever, or you get the raw materials, and then you burn it, melt it down into a sausage-like thing, as you can see here. So that one is pure silicon. And once you have a sausage silicon, and then you just slice it, slice by slice, and then each slice will be your wafer. So a wafer on its own is just a piece of wafer. Then you have to, design your chips, design your circuit on top of the chip. And then once it's designed, then only you imprint it onto the chip. So basically, one wafer, you draw a lot of circuits on it. And then if you can see in scheme number 7, it gets broken down into smaller size. Eventually, every one of it is actually packaged into your chip or transistor or whatsoever. So this is briefly what a transistor undergoes the entire process. And what OSAT actually does is this part. They are at the end phase of it. Basically, once they get the wafer, they just cut it up, and then they package it, and then they test it. If it passes the test, then it goes back to the respective owners. So globally, of course, we are talking about Inari today, but as you all know, they are not the biggest in the whole wide world. The biggest OSAT players in the world are, as you can see here, ASE Technology Holdings, Taiwanese company, MCore, and also JCET. So JCET, I think it's a Japanese company, if not mistaken. So now we're near closer to the big boys, and it's a very competitive industry because basically there isn't much competitive mode against OSAT versus OSAT unless they have some special strengths in terms of technical specialties, like maybe Inari is more advanced in the radio frequency testing. So yeah, probably if you have that kind of advantage, then people might just choose you as your vendor. So moving on back to Malaysia, Inari is one of the biggest OSAT players or related companies in Malaysia by market cap. So Inari is not alone. Basically, there are also a few other players. You have Unisem, MPI, which is a member of Hong Leong Group, and also G-Tronic, also another hot stock for Malaysian investors who are investing in the Malaysia tech industry lah. So, as you all know, at mykayaplus, we really drill down into the business model because ultimately, what makes a company great is the business model. If the company's business model is good, it will earn more money, and eventually the share price will show it. And of course, you might also say there are also other companies out of the blue, the share price can go up and down. Then why not just look at that? Because if you look into companies like that, it would just be speculation. It goes up for no reason, and it will also go down for no reason. Whereas if you buy a good company, chances are if it goes up because the business is good, and logically the share price will also follow. So tech stock, Malaysia tech stock to me wasn't really my strong competency. What about you, Chun Beng? What is your core competency when it comes to investing? Which industry?
No, I think for tech industry, personally, I'm more versed in software. But like you say, Malaysia or the country in this region, usually they are into the manufacturing line, which is more on the upstream assembly hardware and so on. So I think before you jump into analyzing what they do, you just need to know where are they in the value chain. It's quite important. They rely on some key players. Are these things seasonals or whatnot? Because why I will bring up this point is because Inari is quite unique. He make a lot of money throughout these years because of a few key clients, and these key clients are in the forefront or in the place that is quite hot, a lot of demand and so on. In tech stock, things change very fast. If you didn't catch up, or Inari didn't catch up with all these things, then it might not be that attractive in the future. But for now, he has been showing very good result from on year-on-year perspective. Maybe these 2 years not that good, but then now it seems like back to the peak already. So I think it's worth looking into it, especially now pandemic. Every focus is on technologies. 5G seems to be something hot, but then whether it's ready or not, something will impact Inari future's growth lah.
Okay, cool. So I think we both are not really that into the Malaysia tech hardware scene, but nevertheless, it's an interesting scene to look into. And of course, we also have our audience here. If you always have any, information, or maybe you are within the industry, you can also share your thoughts. And let's treat this as a learning session together and not just me talking only. So yeah, let's talk about Inari's business. So Inari started off just as Inari itself. I think they started off just purely in the wireless. I mean, in the electronics and the tech segment is so big, right? So they just started off just in the wireless part of it, and along the years they have grown. And why it became Inari Amerton is because they bought Amerton Global Inc., which is a Philippines company. So when they bought it over and then they merged it under their umbrella, so they also changed their name, also become Inari Amerton Berhad. And they also bought SeedTech, which is a Malaysian company. So each company actually specializes in different things. Inari, they are more in the, as you say, OSAT sector. They also in the RF testing, radio frequency testing. So they basically take more focus or more niche into the radio frequency chips, and then they do the packaging and then also the testing also. And Amerton is more on the optoelectronics side. So basically, they deal with electronics which are more to the optics part of it. So you can see as a synergism between the normal electronics plus the optoelectronics on top of it. And SeedTech is more on the PCB. They mainly do the final packaging for printed circuit boards. So it may seem very, very technological, very deep stuff to you. It also seems very deep stuff to me. And basically, I really had to go through the hassle to understand what is PCB, what is optoelectronics, and also what is chips. It's not straightforward like food manufacturing or banks. They make this product. They borrow you money, then they earn interest. Electronics and particularly Malaysia Tech is a very technical thing, and if you really want to understand it, you have to go deeper and deeper and deeper and deeper. And that got me into a very big headache when we wanted to talk about tech stocks. So just basically, they are at the semiconductor side, and they are more skewed towards the radio frequency testing. But they are also doing other, wandering into other business sector that we will talk about later. But as of now, these are the key parts of their business value model. So you might say that, well, Malaysia company only shouldn't be that great, right? But surprisingly, if you look deeper, they actually have 13 plants in the whole wide world. They have plants in Malaysia, Philippines, and China. So, of course, Philippines is represented by Amerton, and then they have also been building new plants every 2-3 years also. They have been doing capex, and I think the latest one is their P34 plant in Batu Kawan. We also talk about a little bit more deeper into that, because if a company is willing or is able to grow, make and really build more factories, it means business is good. Definitely, that is a key sign, and you can have 13 factories. I mean, the number is more than is double digit. Okay, some companies in Malaysia only have one factory for donkey years, and they cannot even pivot and even increase the factory. So yeah, it's a good sign that we are actually touching on a good company that has growth prospects. So yeah, coming to their, this is basically what Inari tells me when I go into their website. Oh, I do OSAT, I do EMS. And what is OSAT, what is EMS? Basically, I sort wafer, I do assembly, RF testing. And if you are layman, not someone who is not within the tech circle, you wouldn't understand what is wafer sorting. You wouldn't understand what is assembly. You won't understand what is RF testing. You have to go through the same tough process like me. I'll have to understand what is a wafer. Then only I understand, drill down deeper. Okay, they do this. After I see it from a big picture. So if you just go back, you remember just now, you said basically they just take the wafer, they cut it into small square sizes, and then they just package it into a circuit on board or either transistor components themselves. And yeah, I have testing also before they ship it back to the owners. So yeah, this is another schematic diagram. Basically, you remember just now we talked about the long silicon sausage, and then you slice it into this. So your pure this without any printed or design chips is just a flat circle. And once you design it, actually when you put it under a microscope, you can see, not only so, basically it turns a bit more rainbow color after you design and etch the circuit into the chips. And then of course you also draw the line so that the machine can cut into small pieces, and then you assembly into another component, and then you test it, and after you test it, then you ship it out. So this is what basically the sorting, assembly, and testing part where an OSAT company is doing their business actually goes about it. And this is basically how they test their video frequency. Basically, after they assembly everything, they have to test it, right? If they don't test it, how they know it's efficient or it's working or not? So they have to test it, make sure that everything passes the test, and then when they ship it back to the owners, they don't get complained to say, your chips is not functioning, your chips is not working. So they also do the testing part of it, and it's a big chunk of their business lah. So if you talk about Amerton, basically in the optoelectronics, fiber optic packaging, if you find it really hard basically to understand, basically optoelectronics is just another part of electronics, and a very good key example to actually tell you what is optoelectronics is in terms of lights, LED, basically they are maybe electronics that are more towards the light side. So they can design different types of lights, and lights can also transmit information using a fiber optic. So they are also into that particular business segment. So quite technical, but eventually you must understand that we are living in a world where every company is very good at what they do in specific segment only. That means eventually someone who is good at another thing, if you cannot keep up with them, you have to outsource. And this is where companies like the OSAT companies has actually grown for the past few years, because they are very good at what they are doing. Even the big tech guys are also trying to sub this part of the job to them, because they are good at what they're doing. They charge a reasonable price, and it could be more beneficial for big guys to actually sub up this segment of the job to OSAT companies, because lesser defects or whatsoever. So it's a synergism between the upstream players and OSAT companies like Inari. So with that said, if we understand that Inari and OSAT companies actually play a part, important part in the semiconductor space, let's take a look at their numbers lah. Because we are investors, right? And we need to see whether this company is earning money and can invest or not. And this is maybe why you guys are here.
Yeah.
So we look at the revenue part of it. Okay, it's growing, but you may notice that in the year 2019, it actually came down, the revenue part. And later we will drill down deeper, because it's always good to ask why. If people do good, or if a company goes good, you also need to know why. It must not be by luck, it must be by strategy. And of course, if your revenue goes down, so does your operating income, and your net income also gets impacted. So basically, the 3-year trend, you can see in the right side here, it's basically showing the same thing lah. Because revenue drop, the successive operating income, net income also will drop. And later we need to find out why.
But one thing to note, I think this is the past 3 years lah. Maybe you see like going up, and then suddenly the last year it dropped. But if you zoom into the last 10 years, then actually Inari performed quite well. It has been growing from year on year. So I think it's always good to look at the 3-year trend, but then before that, to see whether historically they are good at growing the company or not, it's always good to zoom into 10 years results. Because I think it's not fair to Inari, we just show the 3 years, but they has been performing very well in the past 10 years.
Definitely. And I think later, maybe if you have time, maybe we flash out the 10-year results. And after that, you would like to look at the balance sheet. You see, balance sheet will tell you is the asset growing, and if the asset is growing, is it through what measure? Are they taking too much debt? Are they asking for more money from the shareholders through the equity part? So you can see here, actually, assets-wise is climbing out. So it's a good thing. And of course, for a company which is growing their factories, have been building factories every 5-6 years or every 3-4-5 years, the assets also definitely will go up. And but surprisingly, you see their liabilities is coming down from 2017, from 0.33 billion, drop to 0.26, drop to 0.22. So it's coming down, and particularly the debt also is also coming down. So I think Inari is one of the very well managed company where they are not highly leveraged. They are not certainly not in a position to face liquidity issue, and the management has been utilizing the resources very well. I think they haven't really asked for money from the shareholder. They have given good dividends before. They also given crazy amount of bonus issue before, and you can see the equity is climbing up. Basically, the retained earnings of the company is growing. So if the company is growing, the retained earnings part keeps growing and growing, and then the company just take the money, reinvest, build more factories, and then business goes bigger and bigger. And this is how you get a compounding wealth generating machine like Inari. If you have invested in the company for, like, say, 10 years ago, it's a fantastic company. And cash also has been increasing, even though they pay you more dividends. You can see that 0.45, 0.53, and then came down a bit, and then now it's like at 0.58 again. So company is flush with cash, and if you look at the ratio-wise, out of the total assets of 1.42 billion, around 0.58 is cash. It's fantastic, you know. So the cash amount of it is more than 30% of the company's total assets. The company is a lot of money. It's a good running. I mean, business good and managed well. And if you look at the cash flow statement, also very healthy looking. The blue bar signifies operating cash flow, means that every year sure they will collect money, and it's on an increasing trend. Investing, I think whenever they put in a chunk of money to build in new factories, you will see the amount go up, and it has never over. The number is always lesser than the operating. That means the company earns enough money to expand. It doesn't need to take unnecessary excessive loans with high interest from the banks, nor do they need to ask for shareholders' money to actually par down the liabilities or the gearing. And every year you can see they're always on free cash flow. So it's a very, numbers-wise, it's a really fantastic company. And of course, historical-wise, company has proven it is able to grow in a tightly competitive space within the semiconductor industry. So we have to drill down to what went wrong in 2019. We saw just now, revenue drop, operating income drop, and the net profits will drop. So this is taken from their annual report. If it's too much words, never mind. I highlight the important words. So they say lower volume loading on a major sensor product, changes in product mix, and also the disposal of assets. So when I read this kind of information, right, straight away it triggered me that although it's a tech company, but it is located at the end stream of the semiconductor part of it, which means it is the business part of Inari is very dependent on the upstream guys, which is it's a customer. If the customer suddenly have lesser sales, they will definitely have lesser semiconductors asking Inari to help them assemble and also test. So this is part and parcel of like this is a kind of company where if upstream not doing well, downstream definitely not doing well. And if you go to the right column of it, they also cited that lower orders and changes in product mix. So there's a potential that there are lower orders. So, and this is out of their control because basically they cannot go out and just ask for more business from their major customers. Major customers say, this year I can only do this much, and this is the only thing that they can achieve. Chun Beng, anything you want to add on?
Yeah, like what I mentioned in the earlier, I think most of the player in this region, when talk about OSAT or whatnot, they are not the upstream guy because they don't really active involved in design. What they do is just assembly and test. So they have high dependence on their clients. And for Inari case, later we'll share who is their big client and what make them attractive over the years. But then it really need to drill down to if you found out the big boy that's giving the business maybe not going to do well in the next few years, we should see whether Inari board are going to diversify their income or not. If this thing continue to be status quo, nothing changed, even though the money, the number in cash is growing in every year. Maybe you shouldn't see this as a growth stock anymore. They maybe turn into a dividend stocks. So all these things is something that you should always monitor. But I think so far it's still all right. It's just a sudden drop in 2019, but I don't think it's a big drop. Of course, 2020 may not be that well as well because of pandemic, but this happened to all industry. I think what we should observe is the next 2 to 3 years, whether the big boys still continue to feed them the big business, or they have taken some initiative to acquire some other company in the similar line to diversify their portfolios. I think all those things is important when you look into tech stock because things change very, very fast. If the company didn't have as in didn't take any action that show you they are going to diversify because they may be wrong or may be right. But if they didn't take any action to do all these things, then whatever fantastic result have been shown as a growth stock might eventually become dividend stock, like from what I see. But of course, they won't go into lousy stock. They are still performing very, very well. Worst case is just the growth is not there, but then dividend, I think it's fine. They're still making the chunk of money.
Yeah. This is a very good sharing and a very good point. Of course, if you view Inari as a growth stock, you have to really understand what are they doing. Because if you are in the tech stock industry or you have been following the news, you would have known that Inari over these years, the tech stock, the share price has gone up and down based on news from their suppliers or their customer. And just one news can make the share price go up and down like crazy. It is in evident because I mean this is the fact lah, and people will always want to react to facts when every time the news comes out. So of course, we talk about the prospects first. This is their new plant P34 in Batu Kawan. It's a big plant. I think it's the biggest plant within all their collection of factories, and cost 80 million to build. They have 3 blocks. Block A is fully taken out by Osram. Osram is a German light manufacturer, so synergize well with their optoelectronics part of the business. Block B is the new building, but because their RF testing is so good, eventually part of this new building, the Block B site, is refurbished to do more RF testing. And Block C is currently still empty, but designated for future customer. So you can see that actually how Inari does in business, they know their strength is at optoelectronics and also RF testing. And of course, they also know that the risk is there that if the key customer goes away, and then poof, there goes the growth and also their bread and butter, because they really rely a lot on their key customer. But before the key customer say bye-bye or potentially say bye-bye, at least one good thing that we see is that they are diversifying into new business. They're looking into other revenue streams to ensure that even one day the radio frequency testing business miraculously disappear. At least they are building something. So this is another prospect that we have managed to find out, that they are partnering with a Taiwanese firm, PCR Technologies, Taiwanese listed company, to make optical transceiver in Penang. So it's going to be a joint venture. I think Inari 30%, PCL Technologies 70%. So of course, when it comes to semiconductor companies, as I mentioned just now, each company will have their key strength and key weaknesses, and it's how companies actually look at other companies. Hey, I can do this, you can do that, this and that together can make something good happen. And this is how you see companies like Inari, they have been working very closely with their key suppliers, key customers, and they are also looking out to other tech companies within the semiconductor circle to actually enhance their product offering. And also one slide we didn't include here, they are also into IoT, they are also into the 3D facial recognition business. They are still starting, but if you go and read about it, actually the management is really working very hard. They think that 5G plays a catalyst role in the 3D recognition part of the business, and they are very confident that this 3D technology part can actually grow to 8 to 10% contribution of their revenue in a short 2 to 3 years time. So at least the management is really doing something to make sure that the company does not go obsolete lah. So after we talk about the good part, the sweet part of Inari, you also have to understand that without risk, there won't be a reward. So the risk here that you managed to find out is that, of course, Broadcom is Inari's allegedly largest customer. I think they contribute a lot to Inari's revenue. So if anything bad happens to Broadcom, Inari will definitely face some problems in their future earnings. And if you also look out at who Broadcom is working with, is Apple lah. So basically, if you have read news about the Apple previously, anything bad happened to Apple over the US market, next day when your Malaysian market open, Inari is always the one that's getting sold off. So it's an inherent, although it's not black and white, but I think if you ask the old timers for investing in the tech scene in Malaysia, they definitely know that Broadcom, Apple are dotted lines to Inari. And another risk that we want to highlight maybe also is the USD. Inari works a lot with semiconductor companies and also the tech companies. And when you do export business, it will be definitely denominated in USD. So just like all other export companies, weak ringgit and a strong USD will does wonder to the profits. But if the ringgit is strong and the USD is weak, like now, you will need to also take cue on whether this would impact Inari's upcoming performance or not lah. So Chun Bing, anything you want to add on? We talk about the risk of Inari.
Yeah, I think one good example is, I think few days back or last week, Inari actually we saw a drop. I think it's because of one unique news that linked to Apple. There was one news saying President Donald Trump wanted to ban WeChat application even in Apple devices. And then magically, I think all the investor, not all, I mean, there are some of the trader Inari shareholders, they just make all this link, meaning if WeChat cannot be used in China people not going to buy Apple device, and then if Apple device drop, then they won't take some devices from Broadcom and then eventually impact Inari. I was just joking to Japan the day before when I see the news. I say, let's do a meme to make fun of Inari because they will just see a drop. And it actually happened next day. Then I go and tell Japan, see lah, all this so many speculation happening in the market right now. It's not healthy, but then it's also good for some short-term trader. If you guys are short-term trader, I think these few months is a very good month for you to do short-term trading because it can shoot up and go down like growth stock. Yesterday dropped like hell, then today bounce back. If you are good at selling and buying, I think these few months you must be making quite a lot of money, but I don't think it's healthy. So this is just the linkage between Broadcom, Apples to Inari. I think for USD part, I think there are two sides of it. I think one side is it's not Malaysia ringgit getting stronger against USD. I think it's USD getting weaker against all currencies.
Yep.
And I believe it will continue to happen. So I think this is my personal thoughts because of unlimited QE quantum easings, you just make the USD value drop more and more. Like what happened when they print a lot of money in 2008 and eventually USD go down, and then a few years back we enjoy 1 ringgit, no, 1 USD to 3 ringgit kind of conversion. It will happen again in few years time, in my opinions. And then you see gold price go up, Bitcoin price go up. It's all because of this, because they won't go and help USD notes anymore, because it's getting lesser and lesser in terms of values. So in this sense, meaning there won't be any threat to Inari because of manpower. Malaysian manpower cost is not getting higher, so they're still competitive in this sense. But the risk is not getting it's not about they cannot get business. I think the risk is they lock in the order, but when they collect it, the value actually drops. And maybe I'm not sure whether the annual reports show this information or not, because it will be good for us to analyze what is the payment term and so on. Imagine that payment term is half a year or 1 year, and everything is in USD. You might see a lot of revenue drop, not because of they are not doing business. Their factory is still running day and night. It's just because of the value or the currency they are taking just don't have the kind of currency power in Malaysian note anymore. So this is something I wanted to.
Yep. I think if you are worried about the USD impact, you can also check their annual reports and see how they manage the foreign exchange risk. Most companies will definitely specify out. There are a lot of risks. They will say, oh, when you invest in my company, you have this risk, technological risk, risk of technology becoming obsolete, and I fall behind the so-called latest technology. So if that happens, poof, there goes the business. And then the forex exchange risk is also one of them. We won't touch on that here, but if you are interested, you wanted to dig deeper into Inari's risk and also prospect, you can check out their annual report. It's all in there. So yeah, we also talk about the risk. I think just end of last year, if you can see the bottom slide here, Broadcom looks to sell the unit that could fetch 10 billion. They back then in end of the year 2019 was also one of the periods where Broadcom said they wanted to sell off their RF unit, and when that news broke out, also Inari price also tanked because people were skeptical. Let's say if Broadcom sells off that part, will the new company buying from Broadcom still continue to do business with Inari or not? It's a question mark, right? So people were unsure. People didn't like the uncertainty. People also threw down Inari's shares when this news broke off. And then I think just a few months back, March 12th, then the CEO of Broadcom, Mr. Tan, if not mistaken, Tan Hock, Malaysian, but now the CEO in Broadcom. So they changed their mind and they say they don't want to sell the RF wireless chip anymore. And if you dig deeper, why did they say they don't want to sell? Because they got a big order from Apple. And then they say, oh, okay, this business suddenly looks very promising. And they say, okay, I don't want to sell the radio frequency testing business side anymore. So I'm not to say that, of course, Inari as a company itself, and look at the track record, yeah, it's a fantastic company, undoubtedly has provided very lucrative returns to long-term investors who have invested in this company. But I think maybe for the past few years, when Broadcom underwent a lot of consolidation, because basically previously Broadcom was not Broadcom. They merged with a few companies, and until today it becomes the Broadcom as it is. And if you want to know a bit more, basically there was another company called Avago who bought over Broadcom, just that they maintained the name under Broadcom, and then they hired Mr. Tan to become the CEO. So undoubtedly, moving even now and moving onwards, Broadcom and Apple news, positive or negative, will definitely impact Inari share price. This is the kind of reality of the face, because the market will always be irrational. Even if you're not irrational, the market irrational, and if you buy the stock and then negative news spill out, you have to see your stock in the red. And it's really up to your patience and your trust in the management to further grow the business and to really sail past the uncertainty or volatility of holding or investing into a stock like Inari. Personally, for me also, maybe we will ask Chun Bing's opinion. Inari is in the OSAT, the end value chain of the semiconductor business. They have their strengths, but at the end of the day, they are just a client. They are just listening and following what their major customer wants. In this round, Broadcom. So one fine day, I'm not saying it's possible, nor is it impossible. Broadcom can find someone else to do what Inari is doing, and suddenly Inari will find themselves in a sticky situation. And for me, I don't want to invest in the stock. Suddenly, everything happens in the US when we are sleeping. The next day, I open my eyes and read the news. Suddenly, something bad happened to me. I just can't take that. I want a stock, even a tech stock, which is more predictable and has more advantage lah. So, what about your comments or thoughts, Chun Bing?
No, I think undoubtedly they are doing very, very well in the past 10 years. And they are quite generous to the shareholders. So in my opinion, that the management is good. They has been doing. They are not that type of company that play around with the share price and then it's the major shareholder who reap the most benefit. I think they're quite genuine when doing this kind of business. I think the upside is they also trying to diversify themselves into 5G devices.
Yep.
Then like the 3D thing that you're mentioning, which I see it quite openly. It won't drop drastically overnight, even though they are news. If you hold on to it, at least you get dividend and so on. But I think at the moment, I don't see a very big threat yet because Apple device going to, although the demand is dropping every single year. I mean, if compared to the rest, but I think it happened to other devices as well. Of course, for certain brand they are picking up, but overall, the smartphone device is dropping. So it's not fair that say Apple keep on dropping. I think we also don't change phone that frequent these few years because it's so strong now. So many RAM, I don't know. I changed the phone for what? Unless I spoiled it, but the glass got cracked or whatnot lah. So all this is fine for near term, but long term wise, if the thing they venture in, like what they claim that they can get 8 to 10% of revenue from the 3D recognition kind of stuff, and it didn't realize in the next few quarters, then I think it's a red alert. That time maybe it's a time for you to make a call whether to pull out if you're an investor or to I think at the end of the day you just set your exit strategy right. If you're already in there, I think now is at the upside you should have made the money already. But if you're not patient enough, maybe you can realize the margin. But I think long term wise I mean near term they're still fine, but if the new venture they are mentioning didn't really turn into the result they have shared in next 3 to 4 quarters, then I think it's a red alert. You should make a call to leave this company and find another growth stock.
Yep. Yeah, I think what you shared is particularly true. And just now we also said that the company is actually looking. The management is initiative enough to look into other kind of revenue streams. So we also talk about how they are considering to move into the 3D space and IoT. So maybe I'll correct my thesis. If 3D part of the business really can grow as the management actually promise, then it really makes sense to actually take a closer look to the company, because if the company can grow that business part of it and its prospects is very good, you will never know, maybe the 3D part may someday grow and become bigger than the radio frequency testing part of it. But the most important thing is they started something, and it's just not talk. They really started something. And they also promise, and we just let the time prove whether they are over-promising or they really deliver what they promise. Also, this is also part and parcel of investing, is whether you see the management of the company stick to their words or not lah. Because basically once they say out, maybe the news will not copy paste and then and then use that against them. But as an investor, once they say, you have to remember, and then after a few years, after a few results, then you refresh back whether they have achieved what they promised or not, whether they walk the talk or not. So I think just now Chun also briefly touched on the Apple smartphone, which is also a key catalyst to Inari share price. Of course, we consolidated the numbers, but I think what something that people tend to overemphasize is, Apple iPhone sales goes down, then Inari performance should also be in trouble. But if you really take a deeper look into the RF chips that Broadcom is supplying, they're also supplying to Samsung. So I really don't know why, but maybe not to all the Samsung series, some of the more advanced series, maybe like the S series. So they are also supplying to S series. And sometimes I just really don't know why Apple phones not doing well, then Inari's share price will tank. But if Samsung phones are not selling well, then nothing happens in Inari price. So the market is irrational. Sometimes you really have to go to the deep facts of it and to really determine whether is it really that bad if Apple iPhone's price misperform until Inari's price can drop 30%. So yeah, you have to really take a step back and then study the facts and only determine whether the market is overreacting or not lah. So after we touch on the revenue, the value the company is creating, how important they are in the semiconductor scene, and after the numbers, the prospects and the threats, this will be the so-called last part of it, the valuation part, basically the part that maybe you are also most interested to know. So EPS 4.86 cents, I think, came down because lower revenue, because the product mixes change. PE ratio, I think the share price has gone up after the COVID pandemic peak at March and April. So I think all tech stocks have been going up. Inari is one of them. ROE is good at 13%. Profit margin also decent at 14.5%. And then, price to book, of course, is very expensive because growth companies usually will not have a very good PB ratio. So that's just for a side note. And they're also paying out dividends, 2.48% trailing. If business is good, they will definitely pay out more. Business not good, then they'll become a bit more conservative. So you look at the CAGR revenue growth, I mean, they're still growing. 2008 maybe was a little blip, and maybe 2020 also a little blip also because due to the pandemic. But if the management really manages the company well and then grow the new business segments that they have actually touched base on in their 2019 AGM and annual report. So definitely, Inari definitely still have a lot of growth story. It's just that they can really walk the talk and then make what they dream come true lah. So a dream come true to the management and also to the shareholders like you and me if you are invested in it. Junbing, anything to top up?
I think nothing much on my side. I think it's good if you can share a little bit more on how you view the PB ratio, NTA, especially when you look into tech stock. Because if you see NTA, PB ratio, if you compare with REITs and bank, wow, this stock cannot lah. And then you look into the P, wow, so overvalue, no tangible asset. I think all these things is something that you need to take some time to compare different companies, different industry, because it makes a difference. Tech stock usually behave like this, but for bank or whatnot is the otherwise lah.
Yeah, I think what you pointed out is very correct lah. Basically, tech stock, they grow very fast. If they are in the right place at the right time, right facilities, right technology, and then they get a big contract from the big boys, from the US, from Taiwan, and then that will just amplify their earnings in the near term very, very quickly. And in my opinion, this kind of technological wins is more sustainable than your pharmaceutical stocks kind of rumors. So these kind of things, because tech companies usually, even when they test something, they have testing facilities. Usually they base it on a certain principle, certain methodology, and it could be patented. So once patented, right, it's just like your drugs. If you're patented, that means you can only sell and market this drug until your patent finish. Then everybody can copy. So tech companies usually rely a lot on their patents, and they will utilize these patents to the fullest. And if these kind of testing methods is indeed the best in class, definitely you will get the support and the business from other tech companies who are looking to utilize these kind of services. And also partially explains why tech companies usually is separated to upstream, midstream, and downstream. Upstream companies definitely will not have the key abilities and key advantages of the downstream companies. The same goes wise. Downstream companies, maybe they are very good at testing, they are very good at assembly. They might know nothing about chips design. So this is how all the companies actually correlate and actually collaborate to make the technological miracles that we have today. Smartphones, getting smarter and smarter, faster, brighter screens. All these are because tech companies actually are willing to open and share the value stream with each other. So I hope that this was an informative sharing about Inari Amerton Berhad with you guys. Of course, if you have any information that you want to share with us also, let us know in the comment section. And if not, we will answer a few questions if you have it.
Yeah, and I think in short, it's a company that serve a few key clients in tech industry. They are not tech per se because they are the assembly and test guy. They serve the people who have the design and do it. So for this kind of stock, it's very important to see whether they are the big boss will be giving them the business. Are they having a very good prospect in the future? I think this is point number one. If they do good, they will do extremely good in the next few years, of course. But then this also become the risk to them because they rely too much on few key clients. So when you invest in this kind of stock, the next thing you should look into is whether they have initiatives to diversify their revenue stream or not. Because something happened to the big boy, to the big guy who gives them the business, then they cannot sustain the thing. I think also, thirdly, I think overall, Inari has been doing very, very well in the past 10 years. Very good company, good management, didn't have a lot of high debt, didn't goreng the stock price. I think all this is good track records. I think the key question is whether they are able to diversify, given the fact that Apple device did decrease, overall smartphone demand also decreased. I think all this is the key thing we need to look into it. I think ultimately, USD also important for you to take note because, in my opinion, USD will continue to depreciate the value. If the payment terms that they set with Inari, all those things is very long, then it might be a risk for them to have a short-term drop in profit, although they have same amount of business order coming in. I think this is the key takeaway. I think we would like to hear from you guys because we are into this month that we are going to talk about tech stocks. If you guys have anything to want us to talk about it next week, or maybe you can comment. Else, we'll just relook back what you guys have commented in the last week's sharing session. Then we will pick one of it. Maybe you guys can just leave some comment. You have any stock you're interested, wanted to know more, especially company like Inari. If you study yourself not from the industry, you will be facing a lot of difficulties to do a lot of Google or Wikipedias.
Yes, definitely.
We can do it for you.
Let us do the tough part, and we do sharing free of charge. Okay, I think I see a bit
Yes, one thing coming in. Yeah.
Okay. So Kimberly's asking, does Inari have a competitive mode against MPI? Let me do a quick check. But I believe Inari's core strength is in the radio frequency. They are still the go-to partners for radio frequency testing. So maybe since you asked about MPI, maybe we will take a look into MPI, and then only we can more or less let you know in a more detailed manner whether is it. But now I've had to take a quick look. Not really. MPI is also in the OSAT, but it's in another segment of the OSAT. It's not the radio frequency testing. So from here, on a brief note, I would say that yes, they are both in the OSAT segment, but they are doing different. They are doing semiconductors that are not totally related to each other. So if you want to say that will MPI aid into Inari's business? Not at the moment. So you can also have maybe, yeah, it's a very good question. So eventually, if Inari's radio frequency testing business is so good, you also have to ask yourself, what is preventing companies like MPI or Unisem to actually come head to head to Inari's strength and compete against with them? So yeah, this is also a very good question to ask yourself. Does Inari have enough compatibility to make sure that even if people were to come and fight head on head with them, they will win the war. They will win the. They will still manage to maintain the business or the advantage they have. So if you want another brief example was, remember last time we have Facebook and also Google Plus. So Google wanted to also enter the social media business. So they launched a social media platform called Google Plus, G Plus, and they wanted to fight on head-ons against Facebook. So at the end of the day, we know that Google Plus stopped Google Plus because it wasn't performing, and this is where we actually get to know how strong Facebook is when it comes to maintaining their fortress or the being the monopoly in the social online platform browser social media. Of course, social media now is very wide. Instagram is another segment of its own, and you also have different genre like TikTok and the China fast video, short video kind of platforms jumping around. So yeah, you also have to ask yourself, can Inari actually sustain the mode or not in the radio frequency testing business? So I think that's about it. Please let us know if you have any tech stocks that you want us to share, just like today how we share Inari. Or if we don't have, maybe we'll pick. You can just leave a comment, or if you are watching this not live, we watch this session, you can just put in a comment, and we will read through and we will pick the next company to analyze next week.
Okay. Think that's all for today. See you guys next week. Stay tuned on what company we're going to analyze. We also don't know. We'll let you know. Just follow our page, YouTube or Telegrams. We will be updating you when we have decided to analyze.
Yep. You can also PM us. No worries.
Yep. That's it. See you guys next week.
Thanks you. Bye-bye.
Bye.